Chief Financial Officer for Yahoo. Ms. Decker, we all appreciate your joining us and looking through the comments this morning from analysts about your numbers last night. I don't want to be a wet blanket here, but marketing services revenues light, guidance disappointing, revenues light, and then the real hit, of course, the delay in your new search platform. What happened?
Well, let me try to put it into perspective. As far as the numbers were concerned, we felt like we delivered very, very strong user and usage metrics. Our revenues and our cash flows were in line with the business outlook we provided 3 months ago, or actually a little ahead in the case of operating cash flow. And we kept our range intact for the year. So that range for our full year operating outlook has been consistent since last January. So from our perspective, I think the expectations got a little bit ahead of where we were planning and felt like we could operate on the core fundamentals. In terms of the ad system, there's really 4 components to the design and development of a system of this magnitude. There's the design of the system, there's the coding, there's the testing and quality assurance, and then there's the migration and implementation. We just finished more than a year of coding and development and design of the system, and that was right on time, and we're actually very, very pleased with the feedback we've gotten as we've involved third-party advertisers and tested with our advertising community.
Ma'am, with all due respect, you talk about the expectations getting too high. Why didn't you step in and tell the analysts whose expectations were too high that they were wrong? That's what most companies do.
You know, our practice for the last 5 years has been to every quarter put out our next quarter guidance and our full year guidance, and we've delivered within those ranges most of the time. We really try to focus on the things we can control, which is what we think where we're going to operate, and then the analysts make some assessments from there.
Susan, it's David Faber. Taking out the MSN loss, what was the sequential growth in search revenues?
You know, we don't break out our revenue by line of business in that way, but we did say that the MSN decline took out between 10 and 20 million year over year. We've actually started disclosing the MSN contribution since last fall, and it was right in line with what we had indicated to the market. So this is something we've been expecting for a long time. It was very much in line with our estimates, and it took about 2 percentage points off our total revenue growth, which was 28%.
All right, well, to reassure the market, I know you were asked this question on the conference call as well. Can you at least give us some directional guidance here in terms of sequential growth in search revenues?
We don't break out search. We've never broken out search from the rest of our business. So in terms
well, that's too bad. A lot of your investors are asking that exact question, and given your stock's going to be down about 18%, you might want to answer it.
We've given our total revenue growth, and we've been very consistent about that for the last year, and we're operating right within the ranges that we expected.
Ms. Decker, what's this going to do to your market share? When we look at the numbers through June in search, we got Google #1 at about 45% market share, Yahoo #2, 28.5%, but that's down from about 30.5% a year ago. How much of a hit do you think you're going to take because of the delay in your new platform? I mean, are we going to see Yahoo's numbers go down to 25%?
I'm really glad you asked that question because there's a lot of confusion on market share. Our market share, we believe, has been stable to growing over the last year. ComScore numbers, which is what people are using, have recently been revised in May to better understand what the actual numbers are. Our own log files would say that we're maintaining or growing a little bit in market share, and that's the key question in terms of queries. The rate at which we monetize them, how much each query is worth, is where we've said to the market that we don't think we're doing as well as we can, and we've lost revenue market share. Query market share, we feel like we're really holding our own. So a delay in the system is only a delay for a quarter in the financials in terms of how much we can get for each of those queries. The underlying health of the search product has never been better.
You know, until you said that, I don't think I ever really understood the real situation. The real situation seems to be that you have no idea what your market share is. We believe it's this, we believe it's that, we're not sure. I mean, it sounds like you have no idea what your market share is and whether you're gaining or losing.
We have our own internal log files, so we know exactly how we're doing, but we have to rely on third parties for all the other competitors.
And this data apparently is not very reliable or not credible?
The third-party data in search has been very difficult from a competitive point of view. It's getting better. ComScore revised their numbers in May, and they're a lot closer now.
So where Google stands, where you stand, we just kind of guess at it.
We feel like we have a pretty good handle on where we stand, and we are very pleased with our underlying query growth.
MySpace, some say, is about to top Yahoo in terms of the most visited site on the web. Have you thought about doing an acquisition and trying to expand in some of these fast-growing areas, some of these group sites that are on the web?
You know, we think that the success of MySpace is a real validation of the strategy that we've laid out over the last few years, which is to add communities to a number of our different properties. Yahoo Answers, for example, which we just launched last fall, has accumulated over 50 million users, which is roughly the same size as MySpace in just a year. If you look at our overall unique users, we touch 500 million people on a global basis a month, and that's up 100 million in 1 year, which is twice the size of MySpace. So we're very pleased with MySpace's success. We think it's a validation of the exact strategy that we've outlined and exactly why our unique users are so powerful.
All right, well, we appreciate your joining us. Thanks a lot, Sue.
Thank you. Thank you for having me.
Sue Decker, Chief Financial Officer of Yahoo.